Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. Bitcoin and broader crypto markets are navigating choppy waters as geopolitical tensions and regulatory developments reshape investor sentiment. Bitcoin currently trades around $66,300, while Ethereum sits near $1,947. Escalating U.S Iran tensions dominated market action over the weekend. Following coordinated strikes on Iranian targets, Bitcoin initially plunged from around $68,000 to $63,000 within hours, triggering over $300 million in leveraged liquidations. However, the cryptocurrency recovered quickly, demonstrating relative resilience compared to traditional risk assets as markets reassessed the scope of the conflict. Oil prices spiked 13%, with Brent crude hitting $82 per barrel after Iran targeted Saudi Arabia's Ras Tanura refinery and blocked the Strait of Hormuz, which carries roughly 20% of global oil supply. Gold surged above $1,900 per ounce as safe haven demand intensified. Meanwhile, institutional appetite appears to be returning cautiously. Over $9 billion fled Bitcoin and Ethereum ETFs over 4 months, marking the longest monthly losing streak since launch. However, the narrative shifted recently with $875 million in renewed inflows between February 20th and 27th, suggesting the institutional channel may be stabilizing after pressure from tariff policy uncertainty. On the regulatory front, momentum is building behind the Clarity Act. J.P. Morgan analysts predict the digital asset market structure legislation could pass by mid-year, potentially as early as April. The bill would establish clear boundaries between SEC and CFTC oversight, introduce token classification clarity, and create transition pathways for decentralized projects. Ripple CEO Brad Garlinghouse placed passage probability at 80 to 90%, while industry leaders believe the framework could unlock billions in institutional capital from pension funds and corporate treasuries currently sidelined by regulatory uncertainty. South Korea announced sweeping reforms to government digital asset custody following major failures. Deputy Prime Minister Koo Yoon-cheol pledged urgent review of practices after Seoul's Gangnam police lost access to 22 Bitcoin worth approximately $1.4 million in 2022 by allowing a third-party firm to manage assets without retaining private keys. 2 suspects have been arrested, with prosecutors investigating potential bribery. Market sentiment has reached extreme fear levels, with the Fear and Greed Index dropping to 9, marking only the 3rd time in history sentiment has fallen this low. The previous 2 occurrences in 2018 through 2019 and during the 2022 FTX collapse were followed by extended accumulation periods that eventually led to bull markets with new all-time highs. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.